Investing in real estate. Would you like to get paid a consistent passive stream of income every single month without having to deal with the frustrations and headaches of owning physical real estate? If that's a yes, then you're in for a good one. In today's video, I'm bringing you the top 5 real estate investment trusts so you too can get paid like a landlord. All right, so real quick, a real estate investment trust is a company that owns and in most cases operates income producing real estate. This allows you as the investor to invest in real estate via the stock market. And a great benefit that comes along with this is you don't have to deal with any of the headaches that come from owning physical real estate.
Hello? Yes, my friend. The air conditioner is broken.
So when you invest in a REIT, you earn income through the form of dividends. Some of these can pay you every single month and others on a quarterly basis, just like most of your regular dividend stocks do. Although one thing to consider and to remember here is REITs are required by the IRS to pay out 90% of their taxable income to shareholders. Therefore, when you collect dividend income from a REIT, it will get taxed as ordinary income. There are no qualified dividends when it comes to REITs, unless you have them in a tax-deferred account, such as a Roth IRA. But that's for a whole nother video on its own. So now that we've got a little bit of the groundwork laid out, let's jump right into the top 5 REITs, which by the way, they're not in any particular order. And remember, this is not financial advice. So let's get into it. Number 1, this is my favorite REIT of all time and a very popular one amongst investors. You probably already guessed it. Realty Income, ticker symbol O. Realty Income has a current dividend yield of 4.4%. They are a monthly payer, so they're paying you 25 cents for every share you own every month. They have been consistently paying and growing their dividend year over year for 26 years, and they haven't skipped a beat. As of today's date, their market cap is over $37 billion. Realty Income has a 15.5% compound average annual total return since listing with the New York Stock Exchange in 1994. And they've grown their dividend at a 4.5% rate year over year since that time as well. The company takes pride in paying shareholders a dividend every month. It even says it in their logo, Realty Income, the monthly dividend company. 619 consecutive monthly dividends paid to its shareholders. That's over $8.7 billion in monthly dividends paid. Realty Income owns properties in all 50 states in the United States. They also have properties in Puerto Rico, Spain, and the United Kingdom. That amounts to 650 different clients and 11,000 properties under long-term net lease agreements. Most of these being triple net leases, which basically means the tenant who is renting the property is responsible for paying the insurance, property taxes, utilities, and maintenance. If you haven't gotten the picture, that is a very low risk, high cash flow scenario that will continue to produce a steady income for Realty Income. Their top 20 clients are some of the biggest names known to man. Some of these big name tenants are companies like Walmart, 7-Eleven, Walgreens, Dollar General, Home Depot, CVS, FedEx, just to name a few. If you want to reap the rewards of having your money invested in real estate, Realty Income is definitely one to consider. Now we have number 2. Number 2 on this list is American Tower Corporation, ticker symbol AMT. American Tower Corp has a current dividend yield of 2.4%. They are a quarterly paying company, so you will get paid a dividend from them every 3 months. And that dividend is $1.39 per share. They've been consistently paying and growing their dividend for over 8 years. Within the last 5 years, AMT has grown their dividend at an average of 20% per year. They have a current market cap of over $104 billion. So the big question, what do they do and how do they make their money? Well, with a market as crazy as the one that we're currently in, I think this is a pretty safe play. You see, American Tower Corporation makes their money by leasing out their towers to tenants like Verizon, AT&T, T-Mobile, Sprint, etc. You catch my drift. Basically, anything that has to do with communications makes them money. With the use of smartphones still on the rise, within the next 10 years, we're going to be consuming way more data than we are today. That's just a fact. You can already see the path that we're on with all the 5G stuff going on lately. The way they make their money is by leasing out their towers, and sometimes they can even have several tenants on the same tower, which means they make a great profit and don't really have to spend much. Today, American Tower Corporation owns and operates over 34,000 tower sites in the United States, Mexico, Brazil, and India. The third real estate investment trust on this list is STAG Industrial Inc., Ticker symbol STAG. STAG Industrial Inc. has a current dividend yield of 3.7%. They are a monthly paying company, so you will receive 12 cents per share every month. And they have been paying and increasing this monthly dividend for over 9 years. If you believe in e-commerce and companies like Amazon, then you're a believer in STAG Industrial Inc. The company is focused on the acquisition and operation of single-tenant industrial properties throughout the United States. Hence the name STAG, Single Tenant Acquisition Group. They own property in 40 states and have a total of 544 buildings to their name. Those buildings add up to a total of 100.6 million square feet. Taking a look at this article from April 27, 2021, it says, global e-commerce sales hit $4.2 trillion as online surge continues. Then the article basically goes in to talk about how the Rona situation surged the movement in online sales that does not have a plan to stop and is now becoming the new norm. U.S. consumers spent $78 billion online in March. That's a 49% increase year over year, being the highest growth since the Rona situation in July of 2020. I don't know about you, but I order a whole lot of stuff from Amazon and other e-commerce sites. I think this is going to be a new norm for generations to come. Jason Woosley, Vice President of Commerce and Developer Experience at Adobe, said, quote, "The changes we're seeing are things that are going to carry forward for generations. There's too much momentum and durability," end quote. And frankly, I agree. STAG is positioned to grow over the next several years and become a true powerhouse in the industrial market. Coming in at number 4 is the like button. Smash the like button for your boy, because we all gotta eat. So the real one on the list here, coming in at number 4, is Agree Realty Corporation, ticker symbol ADC. Agree Realty Corp has a current dividend yield of 4.2%. They are a monthly paying company, so you will receive 23 cents per share every month. They have a 9-year streak of consistently paying their dividend and an 8-year streak of growing it. Their current market cap is $4.8 billion. Agree Realty Corp reminds me of a realty income type of company. And guess what else it reminds me of? Coca-Cola and Pepsi. Two great companies. You might as well own them both, right? They have an 87% total shareholder return over the last 5 years. They also have a 13% compound average total return since it went public in 1994. And they have a 5.5% compound annualized dividend growth rate over the last 10 years. Their current dividend yield is 13% above its 5-year average of 3.79%. Simply Safe Dividends indicates the stock may be undervalued. And the test of all time was the Rona situation, which they passed. Taking a look at some of their big name tenants, and we see some very familiar faces like we did with Realty Income. Here we can see Home Depot, Dollar General, CVS, Wawa's, and if you guys haven't had a sub at Wawa's, go fill up your gas tank or go charge your Tesla at a Wawa and go try one of their subs. I mean, that place is never going to go out of business. Couple more big names here are Publix, Goodyear, Chick-fil-A. Come on now. The Lord's Chicken Sandwich? I'm in, baby. The 5th and final one on the list here is Store Capital Corporation, ticker symbol STOR. Store Capital Corp has a current dividend yield of 5%, and they're dishing out a quarterly payment of 39 cents per share. They've got 6 years under their belt of consistently paying and growing their dividend. How about this? I'll give you a quick mic drop on this stock. Warren Buffett has Store Capital as the only REIT in his Berkshire Hathaway portfolio. That on its own should tell you this company's legit. Their top 10 holdings include names like Bass Pro Shops, Ashley's Furniture Home Store, Camping World, Zips Express Car Wash, and a few others. These leases are usually 15 years long, and that's a pretty good way to reduce the risk of vacancy. The future for Store Capital looks strong. Their lease agreements have rent escalations built right into them. So I'm sure you guys have seen the price of rent going up. Store has crossed its T's and dotted its I's on that one. They have over 2,700 properties in 49 out of the 50 states in America. This is a stream of cash flow that is positioned to keep growing. And at a 5% current dividend yield, I'm digging it. Some of the main highlights in their investors relations page are these 5 keys to understanding Store Capital. A growth company that pays a high dividend, built with dividend security in mind, highly selective in the investments we make, available in our operations, and funded on a track record performance. Their investors relations page has so much info. If you guys want, you can pause the video here and read this, or if not, just Google it and just Google their investors relation and it'll take you right to it. Before the Rona situation, this stock was above $40 at one point, and now they're producing the same cash flow from before the pandemic happened, but the stock has yet to recover. Definitely a good one to add to the watch list. Well, there you have it, guys. Those are the top 5 REITs that will eventually make their way into my portfolio. If you already own any one of these, or you own another REIT that's been doing well for you in the past, let me know down in the comments below. With all that said, I hope you guys have a great rest of your week. I'll catch you on the next one. Peace!